Welcome to another edition of Nucleus Investment Insights. Today we are back, and I'm sure this is not going to be the last time, talking about Trump's latest and his latest on tariffs, and it won't be the last time. I'm sure we're talking about his latest on the tariffs as well. We really wanted to, so I'll dig a little bit into what's happening, but as you're probably well aware, following the last week or two, you'd have a different podcast every second day if you really wanted to focus on exactly the minutiae of what's going on right at that minute. But what I want to do is sort of more talk about some of the broader playbook factors that we're looking at. Unfortunately, Dave is a late scratching today. He has, unfortunately, he's had something come up that he couldn't avoid. And so, just me for the day. And we're going to be talking, through this tariff diplomacy, and can America go it alone? Just a reminder, everything here today is general in nature. It's not personal financial advice. If you do want personal financial advice, you can give us a call, drop us a line, and have someone speak to you about your own needs and objectives. I'm going to start with a Goldman Sachs chart, which just to put in perspective, I guess, what the major banks are looking at in terms of their expectations, because there's a whole bunch of things out there, and depending upon what where you get your sources for is sort of this question about what does this actually mean. So Trump's spoken about a 60% tariff on China, universal 10% on everyone else, and 25% on Mexico, Canada, and the EU, as sort of various different times. But he's also spoken, well, pretty clearly, delayed a lot of these pretty quickly, and spoken about much lower levels as well. And so I guess the question is, what could happen is on one side, and then what's priced in, because I think that's probably the most important thing to keep in mind as this goes on, is that markets have an expectation about what's going to happen, and it's the announcements relative to those expectations is what's going to drive markets more so than the actual what's going on, more so than the blow by blow, I guess, of what's happening on a day-to-day basis. So let's take so what this chart I've got up showing at the moment is sort of talking about saying, the 2018 and 19 trade war. So this was Trump's first round at China. Sort of added, if you look at the tariff rate at the moment, it's sort of less than 2% on average. And before this sort of latest round, they were expecting that would sort of a little bit more than double to just under 4%. And then it sort of breaks out the different tariffs sort of on the line at the moment. So there's 10% on China, which probably is going through. I'll dig a little bit more into that later, but that's probably what the expectation would be. The de minimis exemptions on China would add actually a very small amount, and we'll talk a little bit about that as well. 25% on European autos. Then you get 10% on some of these critical imports, and then an extra 10% on China, which is what their expectation now is. Sort of brings you up to sort of roughly, so a little bit more than tripling the current tariff rate, and that would add a reasonable amount to inflation. It's nothing that wouldn't get looked through, but somewhere between I guess 0.25%, maybe 0.5% to inflation is a type of number is sort of being thrown around that this could have an effect on. Then you've got these the upside risks. So do you get 25% on Mexico? That's a big hit to that number. That's going to basically almost double that further effect. 25% on Canada and 10% on oil and gas is on this chart, adding another sort of 2%. If you gave a full EU, so he says, which is, again, just putting that in perspective, if you've got 20% on China and you're going 25% on EU, Canada and Mexico, seems seems a little weird that you'd get some of those but not the others, because then you've got the global autos and then China 60%, showing what that's doing. And so I guess that's China going from the original ones they had before, plus the 20% they've already assumed. So, and then you finally got that universal 10% on just everything coming through. So that's sort of our different scenarios, and then it's a question of trying to work out what's most likely. And you can see here that they are. Sorry, is that the expectations from. Sorry, I've just lost a. Trying to get rid of all my phones off this. Yeah, there's an expectation that that you're going to get 20% on China. I think is over and above what most other houses have been looking at. I think there's been this expectation that 10% on China is sort of maybe it'll come through, maybe it won't, maybe might be a little bit more, a little bit less. I don't think anyone's really pricing in a 60% China. But given this latest round, I think there's probably more sort of jumping onto this path that you can see here that Goldman Sachs before this was sort of saying they thought that the total estimate of all this would be roughly doubling the tariffs, but now they're sort of talking about it tripling the tariffs. And so so the expectations are certainly have already started to get some upward revisions to it. And so relative to that to where that comes in, I think I'd say the market's probably somewhere between 10 and 20% on China at the moment, and not much else on, well, certainly not a broad one on Mexico and Canada. So, okay, so that's our that's sort of the scenarios and where we could go from there. I think that I'm going to take a bit of a step back now and consider where this sort of sits for and how you should be thinking about this as an ongoing what do we do as investors for this. One part is markets didn't react that strongly, say, to the Canada and Mexico. So when push came to shove and there was this last minute, no, you've got a day and a half or whatever the time frame was to sort this all out. Markets sort of fell 2 or 3%, and we saw currencies certainly come off. That still had a reasonable expectation that there would be a solution within there, and then we saw as a solution came and markets bounced back a bit. There's sort of this game theory going on a little bit with these, is that Trump is likely being sort of disciplined by markets in terms of he looks at the markets and that's one thing which is important to him, seeing that they're up, and so when you get some tumbles in markets and some big drops, that's something that might actually convince him to not go as hard on the negotiation or to pull back. But the flip side is, if markets start expecting that he's going to change his view, that he's going to put out these and then he's not really going to mean it, and then he's going to change his view, the market reactions might start getting smaller. So if we had a rerun of the current case, and we quite possibly will in a month's time when the latest stuff comes up, is we get another rerun of this, and at that point, if he pushes it to the brink again, maybe markets don't fall 3%, maybe they only fall 1%. And maybe that's not enough to scare him, and so then he pushes through, and then markets take a 10% dive or whatever it is. So there's a lot of game theory within this, just in terms of trying to work out what do we think is going to happen, what's the market reaction, and the feedback between market reactions and Trump's actions itself. We think is going to be quite large, and so it's very hard to it's going to be very hard to guess exactly what's going to happen. And obviously these things come out by tweet at any hour or minute of the day, and so it's trying to trade it, I think, is going to be a lot more difficult than trying to invest around the edges and take advantage of the decreases or the increases. So the big picture, though, is still what we've spoken about several times, is assuming that markets will manage to discipline him, and that you're buying the dips effectively. When we see these drop back, it's a chance to pick up some stock and sort of go from there. In terms of tariffs itself, the question is, how much effect is this going to have on the US economy? And there's two parts to this. One part is saying, is this good for American consumers? And the answer is no, it's not good for American consumers. It's going to cost them more to buy a lot of these goods. There's another question, which is it good for American companies? And quite possibly the answer is yes to this. And so, you can obviously get to the stage where it's so bad for consumers that sort of drags down companies with it. But assuming that the pain is sort of relatively minor, as we've sort of seen, it's around these levels we've spoken about, is that this is going to allow companies to push through some more of the greedflation. Most studies in terms of tariffs tend to show that when you put tariffs on, domestic companies don't sort of lower their price to pick up a greater market share. They'll to any significant extent, they do tend to expand their margins a reasonable amount. So they basically, 10% goes on the cost of my competitors. Chances are, I'm not going to raise. I might be able to push through a 6% or a 7% increase, pick up some market share, but also pick up some margin and actually do quite well out of it from a company perspective. Whereas a consumer sitting on the other end is facing that 10% hike in prices. So so from a company perspective, I guess it may not be as bad as it's quite likely to be positive as long as the tariff increases stay small. If you get to the stage where it's 25% China, 25% Mexico, 60% China, 25% Mexico and Canada, 60% China, and 10% around the rest of the world, at that point, you're starting to make a major disruption to supply chains. And at that point, you are talking about markets tumbling, consumers really being hit by that, and some reasonable falls based on those types of factors. So we've got the market expectations. We've got the rough economics for tariffs being detrimental to consumers. They are going to raise interest rates as well, and so there's that extra push-pull within there. I think you will see some within bonds. They tend to be more conservative and worry more about what goes wrong rather than equity markets, which is a lot about trying to work out what can go right. And so there's going to be a bit of a premium. We think sort of put into bonds in terms of the yields that you're going to pay, especially for the longer dated instruments, around making sure that can these get the risk that these can blow out. So I'll jump a little bit more into that just after this message.
We'll be back with the investment insights very shortly. Nucleus Wealth is an active and passive investment manager. If you like what you're hearing and want some help with your investing, we can do it for you via our active portfolios. Our tactical and core portfolios use the insights shared in this podcast to construct and manage your investment. We blend tactical portfolios to offer our combinations of international shares, Australian shares, government bonds, and cash. We vary the asset allocation with the goal of protecting your capital in times of market uncertainty. We also have active international and Australian share portfolios. These are chosen using our quality and value investment philosophy. You can find out more at nucleuswealth.com. Now back to the show.
Right. So the next thing I wanted to drill down on is this idea that bonds are going to raise we're going to see that increase in terms of bonds, and that because of that increase. Apologies for that. I think we're back up and running. There is apologies. There was not a slight technical problem, a rather large technical problem, but I think we're back and running again. What we were discussing, let me just bring that back up again. What we were discussing was where we sat in terms of tariffs. Sorry. So I've gone through the market expectations, gone through the economics a little bit. The effect on bonds is where we see the larger effect is probably still going to keep coming. There's going to be a permanent a permanent risk premium for while Trump's around on that bond side. There's a question about the question about will the market reactions get smaller? That's probably the key one we should be focusing on. Is if we start losing that feedback loop because everyone starts to expect, so the boy who cried wolf effectively is if the markets don't stop, they don't fall enough, it's may not be keeping disciplined. The big question really is around China. Now, we saw in the Goldman Sachs one that they've now increased that to expect 20% on China. I think that's reasonable with one really large caveat. So somewhere between so at the moment he's announced somewhere between 10 and 60%. There are plenty of people within his advisory circle, particularly his economic advisory circle, who are dead set on tariffs on China. They don't think China has been playing fair, and there's some reasonable. They've got some reasonable cases there, and they look at the way in which China is acting to America, and in terms of not allowing America to compete with companies in China and very closed borders and lots of issues like that, and saying, well, we opened up our borders and opened up all these trade routes with the expectation that China would do the reciprocal, and they haven't. So now it's time to close them back down again. And so if that's the case, then we're headed for higher tariffs. And if that's what's driving this, then we're headed for higher tariffs. And I think 20% sounds reasonable as an expectation. And there is this potential it could go to 60%. There's going to be a fair bit of sort of backdooring of these. So China, what we saw last time around was that there's a lot of production out of China that ended up then going from China into Mexico and then into the US. And Trump is relatively aware of that and trying to shut down those ones. That's part of the issue with Mexico and other countries that will be trying to prevent that sort of circumventing via other countries. And so I think there's a reasonable chance that you'll see places like Vietnam or Bangladesh or places like that are other sort of sources of this low-cost manufacturing and sometimes owned by the same companies in China. Those will start seeing tariffs as well. And so sort of expect that to be a feature. So that's one part. The really large caveat is, can Trump be bribed? And quite possibly. And so is this, it's great for anyone who is a strong man or a populist to have an enemy. Not great. I guess it's essential to have an enemy. Now, for Trump, it's very much the enemy is the woke deep state, and so maybe that's enough of an enemy. But it's sort of the woke deep state, and China. And the question is, can he go back to just one of these enemies, or does he need to have two? Because relative to last term, the Supreme Court, in one of its more recent rulings, as part of the whole Trump legal saga, basically made it clear that, look, as long as there's a whiff of doing things because he's the president, it just needs to be tangentially, part of his duties as president, then he can probably get away with bribery and corruption and other things like that. It seemed to be a pretty clear, precedent that they set, and a lot of this is, if it's got anything to do with what he was doing as president, it cannot even be entered as evidence. And so, as long as he sort of keeps it like that. So I guess one of the examples I was using is he has a Trump coin out there. China could decide that it wants to buy and convey to him. They probably wouldn't do it publicly, but could basically convey to him they're going to buy lots of it. They're going to buy lots of this. They stick billions of dollars into this Trump coin and push the value up, and he benefits personally out of it. And so, is he amenable to being bribed in order to change his view on these? And across most facets, I would say that, yes, that's the case. China is one area where we just don't know whether, he obviously needs an enemy. Is he happy enough to get bribes from the rest of the world and then not get it from China? So I don't know what the answer is to that, but that's certainly one. The key, one of the key factors in terms of a lot of this, a lot of the expectation we've got to do is trying to work out that. I might jump to a few quick questions, and then we'll then jump a little bit more into some of the the other areas, outside China. So we've had a whole bunch of different questions come through. One of the questions, first question from Scott, talking about how the tariff's going to shake up the Aussie market, especially the companies that do a fair bit of business with the US or China. I think if you're doing business with the US, Australia's not really a target at the moment. Our trade is not the type of trade that they're trying, because we don't manufacture anything in Australia, sadly. It's not the type of trade that Trump's trying to shut down. Most of our mineral resources go to Asia in terms of value. And in terms of the ones that do go to the US, they tend to be the ones the US really wants, and things like lithium and copper and bits and some of the sort of rarer metals, where Australia is one of their sort of few friends in this area, and it's unlikely that he wants to try and upset that in terms of how that's working. So we don't expect Australia to be a target of a lot of this, or if it is, we're a long way down. So we're getting to Australia after he's got through. At the moment he's got Mexico and Canada, and Europe's there, and then maybe Japan, and a bunch of the Vietnams and smaller Cambodias and Bangladesh, a lot of the small manufacturing countries. We would expect Australia would be further down that list after he sort of got through those ones. And so so not really expecting a major thing for that. You can expect more dumping of goods by China on Australia. So tariffs go in, it's going to make it harder for China to sell into the US. And so they're going to try and dump those products on the rest of the world and probably push prices down to that extent. And 4059 is asking about a long-term effect on supply chains. This is, I do think it has a long-term effect on supply chains. I do think there will be more companies putting production into the US, which is exactly what they're trying to get out of this. The idea is that they want more domestic production, and they want more domestic manufacturing, and that the business model is not that they get produced elsewhere and the US consumer consumes, and there's this sort of big trade deficit. Australia could probably take a little bit of a leaf out of that book. So, but maybe we will at some point, I guess, getting back to Scott's question. But it doesn't look like anytime soon. It's certainly not any of the policies of our current political parties. Maybe the Liberal Party, and particularly Dutton, does like to copy Trump's policies, and certainly a lot of his rhetoric. But the flip side is that they're quite well financed by some of the mining companies, and they prefer Australia to be a big mining company and a small manufacturing, because it keeps their cost base down. So maybe we'll see those policies pop up, but I doubt it in the short term. Green, so we spoke about consumers and being good for company profits. I've run through the countries that should be targeted next. So the order for me is Canada, Mexico is there. Whether Europe comes before some of these other smaller countries, technically from an economic point of view, you probably should be worried about your Vietnams and Bangladeshs and places like that before Europe. But I think Trump certainly has a dislike for what he considers woke politicians, as he showed with Canada, and I think that Europe, he would love to pick some fights with Europeans on a similar basis. Japan, has got some reasons to be nervous. They haven't sort of featured on the hit list yet, but there's my guess would be there'd be a fair way down. Economically, you could probably argue as to why they should be higher, but maybe you get a bit of Japan through some sort of global autos type feature. And then what else have we got there? Scott's also asking, could some Aussie industries actually come out ahead because of this? pick up some business in the US and with China? Yes, absolutely. The question is whether the types of businesses you want to try and have is companies that can pick up sort of service-based or manufacturing-based, because Australia is not seen as a target, without sort of being swamped domestically by cheap Chinese imports, and sort of and not big enough, I guess, that they start falling into the crosshairs of people in the US. So there are some service-based companies which might pick up, and so that's sort of roughly where that's coming from. So let's give me one quick more message, and then I've got a few other things I wanted to run through.
We'll be back again shortly. If you like what you're hearing but want a low-cost passive option, Nucleus Wealth is the first to offer passive direct indexing in Australia. The first generation of passive investing was index funds. The next gen was ETFs. Now, direct indexing is here with significantly more customization and control. The benefit of direct indexing is you can add or subtract investment themes, and we have almost 100 different options to choose from. For example, you could buy an international share direct index portfolio that excludes fossil fuels and arms manufacturers and has a tilt towards cybersecurity and cloud computing. Alternatively, you could buy a portfolio with no screens and an extra exposure to nuclear power and defense contractors. You can find out more at nucleuswealth.com. Now back to the show.
Now, before I jump into the next part, I just wanted to sort of preface this by saying I'll try and be relatively apolitical on this. I think there's sort of two sides to this argument, and I want to talk about the changes that Trump is trying to make in the US economy itself, so outside of the tariffs, and then relate that back to how that affects the tariffs. Now, in a way, effectively, what he's trying to do is a bit of a crash or crash through sort of type strategy. He's done a whole bunch of things which are genuinely unconstitutional, and he may not actually have powers to do that, with the view that, look, possession's 9/10 of the law. If I just do it, and then it's easier to ask for forgiveness and permission, and I'll just push through, and if the courts stop me, I'll raise it to the Supreme Court, and hopefully they'll have my back. Which raises a whole bunch of issues, and I'll use one example. There's 50 examples out there, but let me use one of the most recent ones, which is the what's happening in terms of the FBI. So FBI prosecuted all the January 6 cases. Now they've spoken about firing a whole bunch of anyone who was, maybe not anyone who was working on it, but a bunch of people who was working on these January 6 cases with a view that they're whatever traitors or not to be trusted or whatever the case is. But effectively, within the FBI, that the number who worked on it is some massive number. 30-40% of the workforce had some sort of relationship, and a reasonably large proportion had a significant relationship there. There's a whole bunch of issues around, can you fire these people, and are you allowed to fire these people? And the answer is generally no. But if he just pushes through with it and gets them fired, then regardless, then they'll probably have to turn around and make out some big payments at some point in the future when they lose the court cases. But he's getting what he wants in the short term, which is these people gone, and the existing people cowed into submission, or at least warned that if you don't do what he wants, then you're next. So that's sort of going on in the background. So on one side, I guess from Trump's point of view, and a sort of I don't want to call it a Republican point of view, it's probably more of a MAGA point of view, is that this is a deep state. We need to purge the deep state. They're there to do the president's bidding, and the president has won the vote, and so he should be allowed to do whatever he wants to do. So that's one side of it. And to some extent, there's some truth behind that. To the illegal part, then it does with all of these degrees, but potentially it did push too far in one direction, and there's too much pushback, which I guess is what he's arguing from his last time. But the result to then sort of come with unconstitutional one is I don't want to say arguably, it would seem to be pretty clearly a push too far in the opposite direction. But so where do we end up though? Is rather end up stymied in courts over this. So already the FBI is out suing the Department of Justice, which sounds unbelievable as a one department effectively, the Department of Justice is overseeing them, and they're looking for injunctions on this to save the privacy of these workers, and actually saying that putting these names out there is at risk to their employment, a risk to their safety, and all these other things. So, but I guess what I'm getting to with this is you're going to be locked up in courts, and so Trump could spend the next 2 years until the midterm elections tied up in. He's put all these domestic orders through, and now he's just sitting there, arguing court cases. He's fired a whole bunch of people at the Department of Justice and the FBI and things like that. So he's going to have fewer lawyers sitting within his group, or fewer experienced lawyers. Maybe he's going to bring in other outsiders who are probably not going to be as good. He hasn't got a good history of hiring those types of people. When you do have lawyers who you're asking to be strict sycophants and say, no, regardless of what you believe or think or whatever, this is exactly what I want you to argue, regardless whether it's legal or not, you're probably not going to get the best lawyers on that basis. So we could be into a scenario where we spend the next 2 or 3 years just tied up in courts, arguing through those issues. The flip side is maybe he just crashes through and ignores the courts and gets away, and you're into a dictatorship, and he's got rid of a lot of he's got rid of a lot of safeguards and the checks and balances, and so you've got that going on domestically. I know it's a long intro into it, but it's sort of a bit of a binary outcome with those as to where it goes. Does he crash or does he crash through? How does that relate to tariffs? Well, tariffs he does have a lot of control over, and he's got a lot of control without needing permissions. He doesn't need to go against what the Congress and other places have said. So, just another example, he's trying to shut down some various departments. Well, those departments have been authorized by Congress to operate, and so effectively, he needs to push through to do it legally. You got to push that back through the two houses in order to get that signed into law, and then you can abolish them. He's trying to do that without sort of going through that steps, and so that's probably going to end up in courts as well. Or will he just abolish it and worry about the court cases later, or turn it into enough of a dictatorship that everything gets rubber stamped by the Supreme Court? Anyway, so back to the tariffs. Sorry, keep getting delayed with that. So we're at the tariffs. So in whichever case he's in, he's going to have a lot more power to do stuff in the tariffs and actually get stuff done. And so that's the sort of overall factor is, if things start getting bogged down, is he more likely to do more on the tariffs front just because he can? And that's somewhere where he can actually see headway being made. If we go into sort of the dictatorship version and the starts ignoring Congress, ignoring courts, whatever it is, just to do what he wants, now you're at the stage where maybe tariffs isn't as much of a focus. So as we're looking at these tariffs, it's a real question about domestic politics, domestic what's going on there, and just because if he's tied up in courts, he wants to do things, and tariffs is probably where he's going to still have the freedom to do those things. Okay, so that's our sort of broad picture of what's going on in terms of tariffs. The big question is, how do you treat this from an investment perspective? So, looking to try and avoid some of the companies that are going to be the most likely to be caught up in tariffs, or most likely to be punished by them. There is the big question in terms of China. Is this enough to push China into deeper negative growth and potentially some sort of crisis? Look, maybe some sort of crisis. It's probably more likely just to be this long drawn out Japanification of the Chinese economy is our expectation. But it's 60% tariffs and maybe some other things happening. Maybe that's enough for some sort of financial crisis within China that gets out of control before they can rein it in. I think our base case, though, is that this is just a long, slow, drawn-out, low-growth environment for China. So that probably means lots of negatives for the Australian economy in particular. If things got so bad, maybe they'll decide to try and turn the property cycle back on again. with every passing month, though, it just becomes harder and harder, and it seems to be more unlikely that that's going to happen because more and more of the excesses are coming out over time. So, yes, that's those markets. So we're looking this as a strategy by the dips when we see these when we see the negative effects come out, provided that we keep seeing growth holding up, particularly in companies, and providing that we're the market reactions are still keeping Trump in line. So they're the things, I guess, the factors we're looking for. It's a very volatile market. Obviously, it's don't get too hung up on either direction. I think at the moment, and you need to be staying way more nimble than you might have been over the last couple of years because things are going to be more volatile, and we will be living in interesting times. With all that said, I'd just like to do a quick wrap up just to say that thanks for listening in. We're on every Thursday, 12:30. You can grab, if you want to grab our more from us, you can see, I haven't got my stuff set up properly yet. You can get it Nucleus Wealth /content. If you've got any comments or you want to get a topic on board, let us know. We're on most of the minor and all the major podcast platforms and most of the minor ones. Lots of different social media you can tap in to see our thoughts and get yourself on our weekly email list, and we'll send these out to you, including other things that's going on. Thanks